Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have on board Shweta Jain, Investography. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi, good evening, Shweta, and welcome to the show. We have our first viewer query via email. So Mr. Biren Singh from Agra has sent the question. He wants to understand if a lump sum investment is beneficial when markets are trending downwards for when NAV of a fund is low. And he says that he has SBI Magnum Mid Cap, SBI Balance Advantage Fund, SBI Multi-Cap, ICICI Blue, he's got a blue chip fund from ICICI, HDFC Top 100, ICICI Pru Value Discovery. That's his portfolio. So I think the first question is very interesting because a lot of viewers might want to understand the right timing. And when you are investing in a mutual fund, where we always say that you need to have a time horizon of at least more than 5 years, timing the market and looking at the NAV going down or up, how should one figure this out?
Hi, Kavita. Thank you for having me on the show. So Birenji's question is absolutely very interesting and something that each investor at some time or the other thinks about. It's easier said than done, though, and which is why we don't recommend timing the market, because when markets are actually going down, people actually, instead of investing, get antsy and start withdrawing from the market. As funny as it sounds now, it is actually the reality, because when markets are going down, we feel that they'll go further down, and when we see our portfolios in the red, something triggers and we start exiting instead of investing, which should be the logical thing to do. So it's a fight between the emotional brain and the logical brain, and as sad as that is, the emotional brain wins at these times, because we need to protect what we have. So we get into the protect mode. So that is why we don't really recommend timing. Yes, those who can and who are doing it systematically, and there are ways to do that, can invest and should invest in lump sum. But like I said, it's easier said than done. Coming to Birenji's portfolio, so he has a plethora of schemes, a lot of SBI schemes in his portfolio, which some of them do have overlap in the stocks. So I would actually recommend that he relooks at the portfolio from the view when he needs that money, because balanced advantage, he may use it for the next couple of years, and the next 2 to 3 years, if he needs money, he can use that money there. The other schemes are looking good. There's a good mix of mid multi-cap funds. I really need to understand if there's too much exposure to SBI. So if his portfolio is more than 40% in SBI schemes alone, I think he should relook at that. Otherwise, ICICI Blue Chip, Pru Discovery, they're really they're doing well. They're okay schemes. HDFC Top 200 has a really high AUM. So I think that is something that he can relook. So 2 schemes, if he can relook at his portfolio, these are the 2 schemes I would recommend.
One thing, a lot of time investors feel that the NAV of a scheme, even if they've invested for a couple of years, they stay put in the fund. Once the NAV goes up, they think it's a problem to stay in the fund and they want to opt for an exit. Should one be tracking the NAV?
So one can track the NAV, but not in a manner like how it's similar to a stock price, for example. The idea that if something has a low NAV, for example, if one wants to exit a fund which has an NAV of, say, 100 rupees, and get into an NFO which has 10 rupees, I would definitely not recommend it. Because the fund which has 100 has a proven track record, unless it's for other reasons. If the strategies are similar, I don't recommend that they move to the NFO or something with a lower NAV. The fact that something has done well doesn't mean that it will not do well in the future. So it, like I said, it's not similar to a stock's price, that it's become overvalued to speak. But when an NAV is going up, it means that the fund has done tremendously over time, right? So that is all that it indicates. And even if you're getting lesser units for the same amount that you'll invest in a scheme which is well performing versus a new scheme which may or may not perform, I would recommend that you stick to the scheme that you've invested in.
We move on and we have Mr. Guru from Chennai on the phone line. Hi, Mr. Guru. Good evening. How are you doing today?
Yeah, fine. How about you?
I'm doing good, thank you. So I have the list of funds that you've been investing in since 2017. It's ABSL Pure Fund, HSBC Small Cap Fund, and Nippon India Retirement Fund. Any specific time frame that you want to stay invested in these funds for, and any approximate corpus that you want to accumulate? Also, what is the amount of your investment?
It's like for Nippon, it's 2000 SIP monthly,
Okay.
and others it's 1000 SIP.
6,000 each or total?
It's around 5000 total.
5,000 total in ABSL and HSBC,
yes,
and
yes.
Nippon India is 2,000 separately. Okay, so 7,000
Yes,
in all SIP going every month. Okay,
Yes.
and since 2017 you are in this fund, in these funds. Till how long you want to be there invested?
A long time. I want to be in long time.
So at least 10 years?
Yes.
Okay, perfect. Any approximate corpus that you are looking at?
No, I want to know it's like whether I'm holding a correct fund now. Like the market is fluctuating, so I have a doubt my NAV might go down.
What's the performance of your fund so far? Since 2017, you are doing an SIP, that too, so you are technically averaging out all the volatility that you must have seen. So how are the funds performing, and what's the invested amount and what's the market value amount of your investment so far?
So I did not see that actually. Sorry.
All right, so very important for you to track that. But anyways, we have our expert who can help you with that. Okay, so the earlier question, I think it's in continuation over here, Shweta, that the market is down and my NAV of the funds is actually down. But he's been there since 2017, and he wants to be there for more 10 years. He can write out the volatility if he's there for a longer time horizon and if he's investing in a disciplined manner, right? The question should be, are these funds good enough?
So these schemes are the only schemes that he's been investing in, and predominantly small cap, a little bit of mid cap, little large cap in the retirement portfolio, but predominantly small cap is where he's skewed. He will see times of high volatility, and while his time horizon is 10 years, I would definitely recommend adding large cap because it will give his portfolio the stability. Because I like to see the portfolio as a whole, to make sure that investor continues to invest and sees the gains over time, right? So I would definitely recommend one thing that he stops his SIPs. I'm not asking to him to exit portfolios right now. Although if he would like to exit, I think Birla Pure Value is something that he could exit. But otherwise, if he doesn't want to exit, it's fine. He can just stop the SIPs and instead start an SIP in UTI, Nifty 50, and add Kotak Emerging Equity to his portfolio. I think these are two schemes that will do quite well, and two SIPs are good enough. These will bring the much needed large cap and stability to his portfolio. So it'll become a great mix even if he keeps these fund as is. Over time, over the next 2 to 3 years, he'll see a considerable large cap influx in his portfolio, and I think that'll be really good for the stability of the portfolio.
Mr. Guru, is there anything else you want to ask Shweta? I don't think he's there on the phone line with us. But then we have Sanjeev Bhatia with us. Sanjeev, hi, good evening. How are you doing today?
Hi, ma'am. How are you?
I'm doing good. Thank you so much.
Okay, ma'am, you would have received my query. Actually, I superannuated from ONGC in January 2023. And I had my provident fund, which I have not yet withdrawn from the company because it gives me almost 8% plus interest rate on that. And I have an annuity of approximately 50,000 rupees, which I am getting monthly from HDFC. And I had some surplus money, which I have kept in like a fixed deposit.
Okay, sir. And
So,
how much is that?
that must be around 1 CR or so.
Okay.
So out of that, I just want to put some money in some growth, funds which
Okay.
say approximately 30 to 40,000 rupees, which actually gives me some growth, which is more than the FD,
Got it. So,
and which is secure as well.
okay. So the time frame you're looking at is 5 years.
Yeah, I'm looking at 5 years. Yeah.
Okay. So the need of regular income is taken care of.
Yeah, it is taken care of. There is no
Perfect.
issue as such, but still, I don't want that all the money should be parked in FDs only, which is quite a substantial money. So I just want to put something in mutual funds as well, so that I can, it is taken care of. The growth part is
Interesting.
taken care of.
Interesting. So I'll let Shweta plan that. But then before that, I want to know, so what's the plan ahead now in life? What are you planning to do? Are you planning to travel, spend time with family?
Yeah. That's I play tennis, and
Okay.
yeah. So I'm still trying to continue with that,
That's good.
and
Perfect. So then yeah.
and I also dabble into stock markets and on my own, and that's also a substantial corpus which I am actually, doing not the trading but the investment part on my own.
Sure. Do it and
Yeah.
don't do it alone. Do it with ET now. All right. Shweta, over to you.
That's why I approached you, because I wanted some guidance. And
Sure.
last time also you had taken my query in respect of my daughter, so I was just having this faith,
Yeah.
that you will take my query as well.
Oh, you are a lucky viewer. I should say that.
No,
Thank you.
my daughter is actually doing her PG. She's doing
Okay.
MD
Okay.
in
Oh, that's
Mumbai.
lovely. That's lovely. That's
So
lovely.
I sent the query to you for actually what should she invest in,
Yeah.
her monthly, whatever
Sure.
stipend she is getting. So you
Sure.
had taken that query. I thank you for that.
Sure. Thank you so much for trusting us on that. And let's look into your financial portfolio now. Shweta.
So Sanjeev ji, I've done a lot of retirement workshops for NGC, many for NGC as a part of their program. So I'm very happy to help you here on ET now as well. So the 30,000 that you want to invest in equity for at least 5 years, I would recommend that you start off with UTI and Nifty 50 and PPFAS FlexiCap. These are two good funds, predominantly large cap stocks. So you would get less volatility in your portfolio, a little bit of international exposure as well, a little bit of small and mid cap with FlexiCap from Parag Parikh. So I think it's a great portfolio, and two schemes of 15K each. SIP for the next 5 years, I think should be good. You can extend the time horizon. I know you don't have liquidity requirements. So you can continue this, maybe relook at this after a year and so, and see how you are reacting to your portfolio, because you are doing investing on your own. So maybe you see how this is complementing to that as well. So I think it'll be quite an interesting experience for you.
Anything else, Mr. Sanjeev, you want to ask Shweta?
So is that amount okay? Because I can park more funds also. So is it okay to invest that much money, or should I park some more funds?
So I think you should start with this money, because that's the initial thought that you had. So if you want to start with this, it's absolutely fine. Maybe 3 to 6 months later, review this and see how you are comfortable and how you can add more. The only thing I want to add here is a lot of money and a lot of time suddenly on your hands can be quite dangerous to each other. So I want to make sure that you are staying busy and also not trading and investing in stocks. So do make sure that you're not hurting your portfolio otherwise as well.
All right. Thank you so much for sending us your query, Mr. Bhatia, and all the best. We move on and we have a next question via email. Madhu from Bangalore has sent the question, and Madhu says that the funds in the portfolio are Miro Asset Emerging Blue Chip, Miro Asset Large Cap, Nippon Small Cap, HDFC Mid Cap, ICICI Value Discovery, and she wants to know if she can continue in these funds. I think I have Madhu on the phone line also with me. Madhu, hi, good evening. How are you doing?
Hi, I'm doing good. A small correction. This is Madhu Guy.
Yeah, I'm so sorry for that. We just got confused with the name.
No, sorry.
Okay, so for how long you want to stay invested in these funds?
Yeah, so I am looking to be invested at least for the next 5 to 7 years.
5 to 7 years. Any particular goal that
Yeah.
you have aligned with this portfolio?
I probably want to retire at 55. I'm 49, 18 now.
Sure. Okay.
And I would like to travel.
Okay. And you've been investing since how many years?
Probably about 8-9 years.
In these funds, or you've gradually increased?
In these funds, perhaps last 3 to 4 years.
Okay.
General investment about 8 to 9 years, started from 8 to 9 years. I've been just dabbling in direct equity investments also last
Sure.
1.5 years.
Sure. What's the corpus goal from this particular investment, from this portfolio?
I am looking at probably 150 lakhs.
Sure. All right. And the time frame for that is 5 to 7 years. All right.
So I just wonder if this is good, or should I alter, put in more or less, or?
Yeah, we will help you with that.
Thank you.
Shweta, over to you.
Okay, so for him to meet his 150 lakhs, so basically 1.5 crores goal in the next 7 years, he would need to invest about 95,000 a month. I think he's doing about that much, 25, and yeah, he's doing about 95,000. So I think he's right on track to meet this goal at least. But I'm sure there is previously invested money that is there. So he has to figure out how much he really needs for his retirement by figuring out what his monthly requirement is and what other goals that he has during his retirement. So that itself is a whole different exercise. So I would really recommend that he does that exercise. For this portfolio, I think it's a good portfolio that he has. If these are the only schemes that he has, I think it's a good portfolio. The only thing is HDFC Midcap is a scheme which has an AUM of upwards of 40,000 crores, if I'm not mistaken. So I think that's something that he should look at. The other schemes, Mere Emerging Blue Chip and Mere Large Cap, has an overlap of a lot of stock. So that is something that he can sort of see. Nippon Small Cap is a good scheme. He can continue. ICICI Value Discovery, since it's a value discovery fund, it will see bouts of underperformance. So he has to be ready for that. Although it is among the well-performing schemes today, but there will be bouts of a huge underperformance when compared to the market, if especially it's a momentum-driven market. So I think that is something that he should be ready for. But otherwise, it's a good portfolio that he's done. The only thing missing is passive fund, I think, and that's something that I like at the core. But in this, it's not really missing because he has a lot of large cap stocks and funds. So I think that's sort of taken care of. The only thing they're missing is that a low cost fund will not be there. So I think if he's made his peace with that, that's okay. He can make sure that he's on track of his goals, or even close to an earlier retirement than planned, if he's continuously increasing his investments and the portfolio continues to do well.
All right, Madhu, that's the solution for your portfolio and recommendation. Is there anything else you want to ask Shweta?
Nothing at all. Thank you so much for the help.
All right, thank you so much for sending us your query. And quickly, we'll take the last question from Mr. Ram, and he intends to start SIP of around 50,000 per month. Time horizon is 5 to 6 years, and he wants you to suggest some funds with moderate returns and moderate risk.
Okay, so 5 to 6 years, I would recommend UTI Nifty 50. Like I said, I like passive funds at the core of the portfolio. So that can be half of the recommended amount, so 25,000 it could be. And if he doesn't have an emergency fund, he could probably look at a debt fund, like in Bandhan short-term debt fund. Or if he does have already taken care of that, then he could ignore the short-term fund. That's absolutely fine. He could look at an ICICI Balanced Advantage Fund to give him a little bit of debt exposure, and a Kotak Emerging Equity, which brings in a bit of mid cap, bit of small cap, and actively managed large cap to his portfolio. So I think if he's sticking to these three schemes, he has a pretty diversified, pretty stable portfolio, even if it's for 5-6 years. I think it'll be quite interesting for him to invest in these and stay invested for the next few years.
All right, on that note, I think it's time to wrap up. Thank you so much, Shweta, for being on the show and helping our viewers with their financial portfolio queries. And before I sign off, I'm going to leave you with our WhatsApp number and email ID, where we keep waiting for your portfolio-related queries, which we get answered by our expert panel live on the show. Thank you so much for watching. Goodbye.